Welcome everyone to this week's HumpDay Market Recap series. If you guys are enjoying this type of market recap videos with CFO, make sure you guys let me know by commenting down below and subscribing to the CFO YouTube channel if you are new. And of course, for good luck for the rest of this week, press that like button down below. Alright, let's begin. So first off, the markets hit another new all-time highs on the back of May's CPI report. And the markets were basically ecstatic to find that inflation has gone down, albeit by a difference of 0.1%, from 3.4% in April to 3.3% in May. Of course, that's just the headline CPI, as the more important core CPI came in also at a similar difference of 0.1% from 0.3% in April to 0.2% in May. So that allowed a huge surge during pre-market hours for all of the very rate sensitive and rate dependent stocks, sectors, groups, and specifically market caps. And in particular, we saw IWM surging and opening up nearly at $206 from last night's close of $200.64. Again, the closing price from yesterday was $200.64. And so this CPI report also led IWM to have a gain of over 3.25% at one point, which was at the high of the day, or HOD. And this basically hit the home run statement as to how important the CPI report truly was. Now, that was the most surprising thing to me, that such a small difference from April to May's inflation data would have affected the rate-sensitive markets this much. So if you guys turned into my live last night, I specifically talked about how inflation should come in line with expectations and that the markets shouldn't be caring too much about the overall report, whether it be a move down or a slight move up. And I will have that link to that live in the description box down below so that you guys can watch it, which I highly recommend doing. But boy, was I wrong on that, as we were still positioned long on a bunch of longer term IWM calls, and the markets reacted very favorably to our IWM positions. And so we were pretty much happy. And I will talk a little bit more on the technical angle of IWM soon, but let's first review what Jerome Powell said in his news conference after the FOMC rate decision came out. So as we should all know by now, I stated that rates should be unchanged last night in the live because the markets, or specifically the bond markets, were telling us that the rates would be unchanged heading into this FOMC meeting in the month of June. And that's exactly what we got, as the bond prices stayed and had their gains from yesterday and gapped up in a huge way today. And so inversely, the bond yields had a pretty horrible day today after retaining the loss that they had yesterday. And so the initial reaction was to the downside though for the overall equity markets, because there was a huge hint from this FOMC result that there will be only one rate cut for the rest of this fiscal year. And that's where Jerome Powell himself stepped in for the news conference. He basically confirmed that a rate cut was on the table, which is the ideal statement that I wanted him to say, as stated in last night's live. And he specifically said that the end game for this entire rate hike and pausing cycle was rate cuts. And so he also confirmed something that I stated multiple times in the past few weeks, that the other Federal Reserve members were not going to be expecting to see another rate hike on the horizon, as they are highly likely to be completely done with rate hikes. Now, of course, this is all data dependent, but there will have to be a major change or shift in all of the economic data and metrics that they look at for such a radical move back to rate hikes after this months-long pausing cycle. And so overall, he stated the same few things that we already knew, like how inflation isn't the only economic metric that they're looking at to consider further rate cuts in the Fed's projections. And so they also need the slight tight labor market to loosen up. And the first rate cut will most likely be a tiny one. And so it obviously won't affect the overall economy and data that they are tracking. But as he stated, one rate cut can lead to more rate cut expectations in the future. So overall, he did two major things here. He stated that there are still many things to consider when looking for a rate cut cycle, but that there will be a future rate cut before this fiscal year ends. The bottom line is that we shouldn't be too excited to expect another rate cut after the first cut, as the initial cut shouldn't amount to much, right? And this shouldn't also do too much for the other economic metrics and data. And so they're still very much looking at things from a data-to-data standpoint before they can make a major shift towards a rate cut cycle. So in all, this clearly tells me that they're still in that gray zone area where they need to be 100 or even 1000% confident and assured that inflation will move lower to their 2% target and the labor market will loosen up without breaking the labor market and the overall economy towards a Fed-induced recession. And so that usual wishy-washy tone and that gray area zone that the Fed has shown today, with a slight change in having more confidence in their bigger picture perspective and goals, just clearly tells me that we are definitely getting a rate cut before this fiscal year ends. And I personally still hold the idea or prediction that this will happen during quarter 3, or basically during September's FOMC meeting. And based on the Fed's comments today, I also do not think that a rate cut in July's FOMC meeting will occur. Hence the reason why we saw that late day sell-off as the markets realized what Jerome Powell was saying as he concluded the conference. All right, so with that completely out of the way, I quickly want to go over one of this week's CFO Swinger Watch report's swing trade idea, and that was Reddit. So I also have the then private but now public technical analysis video for this swing trade idea from the report itself. So make sure you guys look in the description box below to watch that video as well. So RDDT had a few entries here. So either we get an entry at a bounce from 59.55 or 60.10. And yesterday, we're able to get that entry point over 59.55. And today, I ended up closing for 90% plus return on those specific option contracts. And I closed out as we hit that 64 to 64.50 area. And to me, that made complete sense, since this is the major neckline resistance level for the overall cup and handle chart pattern that this one was showing. And so if you guys want to know the exact option contract that we were trading and looking at, make sure you guys join the CFO Swinger Watch report and the private CFO Discord. Okay, so obviously I had a lot of room left to get this one for more gains. However, again, I was just following my trading game plan. So in hindsight, I should have and could have held on for more, but I decided to take the risk off and not risk the 90% return that I had overnight. So to me, this was a very successful swing trade idea from the CFO Swinger Watch report. Now, if any of you guys that are members and readers of the report and the private CFO Discord community, if you guys are still holding this, congrats, because you guys have had a huge run today from this swing trade idea from the report. And finally, I want to go over IWM. So let's get back to this small caps or the Russell 2000 ETF. So it has held really well after today's gap up, as seen here, as it closed positively with a gain of about 1.54%. But I am not scared about not taking out my IWM long-term calls today because it really hasn't shown me a reason to do that yet, frankly speaking. And in fact, let's go over how the monthly time frame looks, as the last month's candlestick and this month's current candlestick are looking ripe to rip in the next few months. Okay, so let me take out my technical analysis here. So this is June's candlestick, and so far, based on the current sentiment and climate that has been set from today's CPI report along with the FOMC meeting results and conference, I think the low has been made in my honest opinion. And this means that last month's inside candlestick can let us know that this current consolidation phase that IWM or the Russell 2000 is in right now can lead to a huge breakout that can last for months. However, that is completely dependent on this month's candlestick, as I would love to see, ideally, us having a nice long bottom wick and a nice candlestick body at the top to give us a nice green hammer candlestick at the end of this month. However, we can also have another smaller inside candlestick, which means that we can continue to range trade with the current range from the lows and the highs that we have right now, and create another and print another inside candlestick. And that means we can have even more bullish conviction as we head into the month of July, as that will be 2 consecutive back-to-back inside candlesticks, which can usually lead to and tend to lead into a big breakout to the upside. And again, inside candlesticks are usually a signal of continuation, and the continuation of the previous trend, which is an uptrend for overall small caps. Okay, and so that means if we do see that overall continuation of this uptrend, we should be seeing 210 being hit, and then 216, and then finally 226.50. That is my maximum. And then ideally, okay, now this is going a bit too far out, but ideally, I would want the maximum to be at the previous all-time high area that we saw back in 2021, around 233. All right, I also discussed this level in last week's Wednesday HumpDay Market Recap video. All right, so that is it for this video. If you guys liked what you heard, please leave a thumbs up down below and hit that subscribe button. And if you're new here and want to join the CFO Swinger Watch report and the private CFO Discord, you can get both for 50% off for your first 30 days. It's a first come, first served basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot. And of course, if you want to join tonight, and if you do join tonight, you can gain access to the current swing trades and ideas that we have on right now. this week's and previous reports, and much more. So make sure you guys DM me on Instagram at chartsfocus1. Also, make sure you guys check out the other videos on this channel to continue your learning in trading. Thank you so much for watching, and I'll see you guys next Wednesday.